What's going on, everybody, and welcome back to the channel. My name is Kramer, and in this video, I want to share with you guys an idea I had about starting a real estate fund. So without further ado, let's go ahead and jump in. All right, so there's a million different ways to buy real estate. But one of the ways in particular is by starting a fund. So if you're not familiar, this is essentially a really simple breakdown of what it looks like. I essentially would be the fund manager in this case. And what I would do is I would raise money from private investors who want to be completely hands-off and earn the passive mailbox money that everyone talks about. What I would do then is take their money that they invest into the fund and go buy properties. Then once the properties spit off cash flow, I would give the investors a portion of it, and then I would take a portion of it as well. Obviously, it's a lot more detailed than that. That's just a simple explanation if you have never heard of it. So using that concept of a fund, it is something I've been thinking about for literally years now of if it's something I want to do or not. So in this video, I want to talk about why I would do it, why I wouldn't do it, and kind of all my thoughts around it. So let's start off with why I would do it. I know that I have the ability through the people I know to raise a lot of money. I'm talking millions of dollars. So if I can raise millions of dollars, I can buy millions and millions of dollars worth of properties. Now, of course, I would only own a percentage of that based on how the fund is exactly structured, but I could essentially own a lot more real estate than I could afford if I just buy it myself. So that's why it's really attractive to me to raise money from other people, because there's really unlimited money out there. It's just as many people as I can meet that will give me some money to invest in the fund. That's the limit, which again, sky's the limit when it comes to that. So I really like that. The biggest downside though, and the reason why I haven't started one yet, is I don't know if I'm ready at this moment of recording this to have such a long-term commitment to a bunch of different investors. Because real estate, at least the way that I play it, is a long-term game. I don't fix and flip properties. I hold for the long term. So for me, it's hard to say, you know what, in 5 years, this is where I want to be. 10 years, this is where I want to be. And if I have investors' money, part of me feels like if I don't have that clear vision, it's not really fair for me to hold on to someone's money without a clear sight of the future, if that makes sense. So that's why I haven't started one up until this point, but it is something that I am very much still considering as I get my vision more and more clear. So I'm going to use ChatGPT to give you an example because honestly, ChatGPT breaks it down super simple. Obviously, this is better done in a spreadsheet, but ChatGPT is kind of cool. So this is what I'm telling it. So let's say I start a real estate fund that buys midterm rentals. And let's say the properties earn a 20% cash on cash return. Now, just for context here, the properties I've bought so far have been earning way more than 20% cash on cash return. The first one I did was a 46% cash on cash return year one. The second one was literally 100% cash on cash return year one. And the third one is going to be closer to 80% cash on cash return year one. So 20% is really conservative, but I want to keep it, again, super conservative. So that's that. Now, let's say I give the investors an 8% return. So let's just say in this example, I say to an investor, hey, you give me 100,000 and I will give you 8% return on your money every single year. So they're like, all right, 8%, that's pretty good. And that's not even including all the appreciation, depreciation, tax benefits, all that stuff. So just 8% return on their cash. So then once they get their 8%, I then get the next 2% as my share in the pie. So then I get the next 2% of the return. And then anything above the 8% that I give them, and after I take my 2%, we split the return 50-50, okay? So if I go ahead and press on submit on ChatGPT, it's gonna show exactly how much I would make and how much everyone would make if, let's just say, I raised $1 million. So if I raised $1 million, really that would buy me about $3 million worth of properties. Because again, I'm getting mortgages on these properties and I'm not buying these properties cash. So if I took $1 million of investors' money that generated a 20% cash on cash return, after a year, I would have $200,000 in this bank account, right? So then here's how the distributions would work. So it's showing that the first 8% would be straight to the investors. So they would earn $80,000 from this pool of 200,000. Okay, so cool. They get their $80,000 at 8% cash on cash return. So then the next 2% would be my fee. So my 2% would come from this $200,000 number, which would then earn me $4,000. But then where it gets even more juicy is right here. The remaining $116,000 is then split 50-50 between me and the investors, which would give me $58,000 and would give the investors an additional $58,000. So now if I pull up my calculator here and I say, okay, an investor earned $80,000. And again, let's just, for simple math, pretend like this $1 million that's invested is just coming from one person, although it would likely come from multiple people. Let's just say they earned $80,000 plus the $58,000 that is split from the remaining here, that means they would earn $138,000 in the first year. Now, if we divide 138,000 by $1 million, 1, 2, 3, that means they're going to earn a 13.8% cash on cash return for being completely passive. And I would say that's pretty good. That's also not including, again, the tax benefits, the appreciation of the property, the depreciation of the property. All the things and reasons why real estate's awesome is not even included in that number. So they're earning a 13.8% cash on cash return year one. They're super happy. And then me, on the other hand, I'm earning $58,000 plus $4,000, which is $62,000, which is basically $5,000 a month, which, to be honest, isn't that great. But other things that aren't included in this would be my company managing the properties. So let's just say we took a 10% management fee from managing the actual properties and the day-to-day operations. That would earn me probably another, let's just say $20,000. Plus, I now have equity in this portfolio. So again, if I had 20% ownership in this portfolio, I now have $200,000 of instant equity in these properties. That's pretty cool. Plus, I'll get all the appreciation, depreciation, tax benefits, just like the investors. And of course, having a real estate fund like this is a long-term play. So I want to show you what it would look like if I then raised $5 million total. Okay. So if I earned $5 million total and my property still got a 20% cash on cash return, which again, I know for very confidently that I'd be able to do that. This is how it would play out. So the investors, let's just say again, it was one investor, but it'd be more, but they earned 8% on their $5 million. That would be a $400,000 return to them. Then I would get 2% as my fee from the 9% and 10%. That would get me $20,000. And then the remaining profit would be split 50-50. So there'd be $580,000 split by 2. So that means that I would get, if we scroll down here to the summary, I get my $20,000 for my fee plus $290,000. Now I'm earning $310,000 per year in just distributions. That's not including the appreciation, depreciation, and the equity that I have in this portfolio without hypothetically putting any of my own money into this property or this portfolio, shall I say. So this is something that is super enticing. Again, it's not a short-term play at all. This is a long-term play for sure, but it can be something super, super, super profitable. So I'm curious to hear your thoughts, your questions, your comments down below. And stay tuned whether or not I actually launch this thing. So that's all I got, and I'll see you guys in the next one. Peace.